Let's take a look at what's going on with Dogecoin today. All right, so we're still looking at this falling wedge here, and the last time I made a video, I was kind of looking at more of the bodies. I'm on the daily time frame right now. The first time we were looking at this, we were looking at this support and this support. Then we broke that below there, and I was thinking that might have been a fake out. We started heading up, and then we kind of came back down and we broke below this line again. Like I said, I was using the bodies right here of the candles on the daily time frame. And so we broke below that and now we're under it again. So, and I also readjusted it something like this. What I'm thinking is this could be just that a fake out in a falling wedge pattern still. But the other thing that I was looking at, let's go ahead and delete this line real quick because I kind of readjusted it again, because I noticed that we have a bottom right here and then we have a bottom right here, just a wick down, boom, and then shot straight back up, wick down, and then shot straight back up. So I adjusted the bottom support line to that line down here, something like that, and check out where we're getting support right now, right along that line. We kind of wicked below it a little bit, but we are getting a little support and we are pushing to the upside. So I'm wondering if this is the falling wedge that we're looking at now. Like I've been talking about in my videos, I'm really watching this resistance right here. We got resistance, giving us this trend line going to the downside like this. I think if we could break this resistance, then we can start getting more bullish. So we're still basically in this falling wedge pattern. The only other, well, there's a couple other things. Okay, so another thing is that I was also talking about, let's see if we can hold support at .185, the 78% Fibonacci retracement level. We get the Fibonacci retracement levels when we have a big run to the upside. We start having trouble up here. We start kind of topping out, should I say. You could look at this in any chart and we get the bottom of the run and then we go all the way to the top of the run. We get the Fibonacci tool, we drag from the bottom to the top of the run. And a lot of times this helps because it acts as support and resistance. So, and when we break one of them going to the downside or to the upside, then we start looking at the next one going down or up. So right here, we held support on it a couple times. That 185, I hit my target right there. Bounced up like 25%. Then it started coming down, hit that 185 again, and then we got another bounce to the upside. I think this was around 18%, something like that. But we didn't hold support on there the third time we came down and touched it. We actually broke through it. So if we break through it, then the next spot that I'm looking at is the next one going to the downside, which is actually the bottom of that Fibonacci sequence. So I'm wondering if we're going to come down to 10 cents still. I don't have a limit order here or anything like that, but I'm kind of wondering if it's possible that we do come down there. Just because we broke this Fibonacci retracement right there, got that red candle, but let's see. I'm also watching, like I said, I'm watching this support line right here, and we are kind of holding support on it. So let's see what happens. If we break this line going to the downside, then I'm going to start getting more confident on that 10 cent target. But right now we are holding support. Let's see if we can just stay in this falling wedge pattern, break that resistance eventually, and then break to the upside. Right now, let's take a look at the 9 moving averages on, we'll start with the daily time frame. So the 9 moving average is this blue line right here basically. And when we break below it, a lot of times what will happen is we come up to it and get resistance on it and it pushes us to the downside. When we break above it, sometimes we'll get support on it and they'll push us up. Like right here, nice move to the upside. Once we broke that 9 moving average, we broke it right here. Both of the times we got nice moves to the upside. Right now we are right below it, and it looks like we might be testing it here in like a day, pretty soon. So yeah, just saying that we are below the 9 moving average on the daily time frame, which is technically a bearish position, I guess you can say. But all we have to do is just break that going to the upside, and then maybe we could start breaking that resistance. But that's the daily time frame. Let's take a look at the weekly time frame, because this is one of the bigger things that I've been looking at as well, and I talked about this on my last video. Let's go ahead and remove these trend lines real quick. And we're looking at this blue line again, like I was talking about, this 9 moving average right here. And this one's a lot more clear because over here we broke above it, we closed that candle green, and then we came to the next candle, we got a red candle, but we tested that 9 moving average. Let me zoom in a little bit more so you can see maybe a little bit better. Okay, so right here we closed this candle green, and then the next candle we got red, but it came down and tested it, and we got support on it. Like I was telling you, when we come down, we get support on it, bounce, bounce. We're getting support on it and holding at that level. And then, so we get support on it, and it pushes us to the upside. This is very clear. We broke above it right here, and ever since then, we were getting good moves to the upside. We had that nice little run that I was telling you about, or that, you know, this Fibonacci retracement sequence, this big run, basically. And then we started heading down. We got these 2 red candles, and right here is when we broke below that 9 moving average. So we closed this candle below the 9 moving average. The next candle, we came up and got resistance right on that 9 moving average. Closed this candle green, but it was still underneath the 9 moving average, which is, like I was saying, a bearish position. Next candle, again, resistance right along that 9 moving average. And you can just see this whole area right here. Let me see. Brush. Okay, so you can see this whole area. We've been coming up to it. Boom, 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 boom. We actually wicked above it right here on this candle, but we closed that candle below it. And that's really what we want. Like, that's not what we want. Or let me rephrase that. Okay, so what we want to do is we wicked above the 9 moving average right here, but what we want to do is close the candle above it. That's going to be the good sign, like we did down here. So we wicked above it, and then we came back below it, closed that candle below the 9 moving average. Therefore, we're still underneath that moving average. Same thing here. We wicked above it, but we couldn't stay above it. Came back down and closed below it. And then ever since then, we've been getting like kind of big red candles. In general, we are below the weekly 9 moving average, bearish position, just like a not so good position. What I want to see us do is I want to see the 9 moving average come down, and then we can break through it going sideways. Or I think it's easier to break through it going sideways as opposed to trying to, when it's on top of us, then we have to like kind of hit it. It's like breaking through a roof as opposed to breaking through a wall is kind of the analogy I like to use. But yeah, so we, like over here where it's above us, we're trying to get through it and it's not working. If it could come down, if we can go sideways for a little bit, then the 9 moving average could possibly come down, and then maybe we can break through it going sideways as opposed to us coming into contact with it and then just getting rejected and pushing us to the downside. And check out like back here, let's just use this for an example, because we were testing it in this area too. Like right here, it was above us. We came into it. We actually did break above it. Like, you know, sometimes it's not perfect. Sometimes you will close those candles above the 9 moving average, but it comes back down. So it's not perfect. So that's why you have to use it's part of the puzzle though. You know what I'm saying? So, like over here, the 9 moving average came down. Then we were able to break through it a little bit more sideways than it being clearly above us. I mean, you can see like over here too, same thing happened where it was clearly it was above us like a roof. We're trying to break through the roof and we can't do it. Over here, it kind of comes down and we're able to break through it a little bit more going sideways, kind of. You know what I'm saying? We were still underneath it, but it comes down a little bit more and then you kind of break through it sideways. That's how I kind of look at it anyways. So that's what I'm wondering if we have to do here. Like over here, it's clearly above us. It's actually kind of far away from us. That's why I'm wondering if we're going to have to go sideways for a little bit, maybe even go down a little bit more, then go sideways a little bit more. So yeah, this is one thing that I'm really looking at though. If we could break through this 9 moving average going to the upside, then I think that's when we can start getting much more bullish. But right now it looks like it's going to take a little bit more time for us to do that. I mean, we might be we might be going sideways for a while. We might have to go down a little bit more. The next spot that I'd be looking at to buy is maybe like 10 cents, kind of. Like I said, though, going back to that daily time frame, I'm also watching this falling wedge pattern where we're looking at the tops giving us this trend line. And then I'm also looking at these bottoms down here where we have that bottom right there and then that bottom right there, something like this. And this is my favorite. This is my favorite pattern, pretty much, as you can see from my logo, is the falling wedge pattern. Once we break that resistance going to the upside, technically the top of the pattern is the target. It doesn't always perform that good. Like sometimes it'll go like 50%, like to somewhere like right here, and then it'll kind of fizzle out and just head back down, or get a nice little pop and then come back down or whatever, and then we'll kind of form a new pattern. It's not always perfect that we go all the way to the top, but technically that is the target. Once you break it going to the upside is the top, but you have to watch for the previous resistances in general. Sometimes when we hit these, that's like the end of the run and we go down, especially if like the market's not doing so good. So those are kind of the things that those are some of the things that I'm looking at. If we start heading lower, 10 cents would be where I would kind of look at next. Like I said, we have these Fibonacci retracement tools. I mean, well, we do have the Fibonacci retracement tool, but we have these Fibonacci retracement lines. And when we break them going to the downside, the next spot that I look at is the next one going down. And we broke this one going down, so maybe we could be looking at this one. Like I said, the other thing about falling wedges is sometimes you break below that support level and it's a fake out, come down, and then come back up through it. You know what I'm saying? So that's also a possibility that maybe we go sideways for a little bit, come down, hit that 10-cent level, and then we break that resistance going up. Maybe we'll have to wait and see. It's like I was saying in my last video, in the past, like last year pretty much, we had this falling wedge right here. We broke that resistance up. We got a nice little pump to the upside and then it came down. We kind of went sideways for a little bit is basically my point. These are daily candles. Each one of these candles is a day. We kind of went sideways for a while before we really started moving to the upside. So we could be looking at something like that again, where even if, like, let's say we kind of go sideways, we break that resistance, it might not shoot up immediately. We might have to go sideways a little bit and then maybe something like that. But once we do break that resistance, then we can start kind of getting a little bit more bullish. And let's take a look at Dogecoin compared to Bitcoin. I mentioned this on my last video that basically this chart is Doge compared to Bitcoin. If this chart is going down, then you want to be in Bitcoin, or you'll be losing less money, should I say, or whatever. Basically, if it's going down, it's Bitcoin's doing better. If it's going up, then Dogecoin is doing better. So in this little run, Dogecoin was beating Bitcoin. Right now, in this downtrend, Bitcoin is doing better than Dogecoin. Bitcoin is doing better than Dogecoin. I think I said that correct, but anyways, what we do is we still watch trend lines in this one, and we kind of just watch the trends on these ones more than anything. There's patterns in this one as well, but what I'm looking at is we have resistance giving me this trend line right here. What we want to do is watch this trend line. If we could break that trend line going to the upside, that's going to be good for Dogecoin, or it could be a possible sign that Dogecoin might start outperforming Bitcoin. And usually when that happens, the Bitcoin money kind of a little bit more Bitcoin money flows into Dogecoin, should I say. And I mean, I think that's the psychology of it. But anyways, it just means that if we break that downtrend, then maybe Dogecoin might start doing better. I also mentioned in my last video how I was watching this bottom, and if we break that bottom, I think we didn't break it quite yet, but I was saying if we do break it, then this might be like the sign that we might be going to those 10-cent levels, 13 cents, something like that. And I think we came down to like 14 or 15 cents. So yeah, we broke that going to the downside. The bottom that I'm looking at is we had support right here, or we have these bottoms. So I have this trend line right here. It's possible that we still have some more room to go down, is basically my point, to the bottom, at least on this chart over here. So we still have some room to go down, which could lead us to around 10 cents. But we'll be also watching this trend line right here. That's what I'll be watching. Is that trend line? Maybe we'll come down, start going sideways a little bit. If we break that resistance, then we can start getting more bullish. And I think that's about it. Let's go back to Dogecoin real quick. But yeah, so we broke that support right here, and ever since then we've kind of been, that's when we kind of broke that Fibonacci retracement level, that 185 Fibonacci retracement level. The other thing that I was kind of looking at, let's see, I think I was looking at the RSI. Let's put that back on. I was looking at the RSI, so I deleted the 180 moving average. But I was also looking at this 180 moving average right here, this orange line, and that's where I was looking at like maybe 13 cents as well. Around 13 cents maybe. So like, ouch. It's possible that this 180 moving average will come into play, and maybe we could get a bounce on there and not go all the way down to 10 cents is basically my point. We might be, this 180 moving average might prevent us from going down to 10 cents. But yeah, so that's just another thing to think about. But we'll have to wait and see. Like I said, there's a lot of moving parts in this right now. We have this support right here. It looks like it's holding support, pushing us to the upside. What we really want to do is break that resistance though. Then we could get more confident on going to the upside. If we break, okay, so let's go back to the Fibonacci retracement levels. Like I was saying, let's say we come back up to 185 and we break 185 going to the upside. If we can break 185 right here, like going up, then maybe we could start, that would be another case that we could start looking at the next targets going to the upside. To start with, let's say we broke 185 right here and started heading up. The next spot that I'd be looking at for possible resistance is the next Fibonacci retracement level, the 61% sitting at 0.248. So let's say we come up, we break 185. Next spot that I'd be looking at is 0.248 as a target. And then I'd be watching the trend line as it goes to the upside. If we broke that trend line, going, like let's say we came up, hit 0.248 and started heading down, then we'd kind of just be, like I said, sometimes they act as resistance. And then if we get resistance on it and we start heading down, the next one that I'd be looking at is 0.185 in that situation. Like right here, we broke below 0.185. So now I'm looking at 10 cents, if that makes sense. If we break above 185 and start heading up, the next target that I'd be looking at to maybe take profits on is 0.248. In general, I've been kind of in an accumulation phase as we go down. And I think we're at some pretty good levels right now. So I would rather kind of see it go up and want to take profits more in this area than like these smaller trades. But from where we're at right now to 0.248 it's probably going to be a good move. Let's see, from where we are right now, that's around 46%, which is pretty hardcore, honestly. But like I was mentioning in the last video, there could be more blood in the water, and I haven't really made videos lately because it doesn't feel like a lot has changed really. We're looking at a falling wedge, and I kind of readjusted the lines a little bit, but it doesn't feel like a lot has changed. You could go watch my last video, and it's, not a lot has changed basically, except that we did break below that 185 move, or below 0.185, and it looks like we did start to kind of head down, but we're not getting a lot of like red volume, like down here, like big huge red candles, like out of the ordinary, that is pushing us to the downside. So that's the other thing we want to look at in these patterns is the volume. So we have like declining volume right here. If we start breaking that resistance, what I want to see is green candles breaking this little trend line of the volume. That's not perfect trend line, but it is kind of declining, you know what I'm saying? So that's another thing that we look at when we're watching these patterns. When we have a pattern, we're looking at the volume, the beginning of when the volume was huge, and then the declining volume. And then once we get like a big pop, or once we break resistance, then we look at the volume and make sure, like, is the volume actually coming through like it kind of came through over here in this area. We had this falling wedge over here. we kind of started to get, like, let's take the volume, look at the volume right over here. We had declining volume, declining volume, declining volume. Right here we got some green volumes, and that is where we really started to take off. Then the volume really started coming in when it was pushing up to the upside like that. That's what we're looking for in these patterns. Is we're, like I said, there's a lot of moving parts, there's a lot of pieces of the puzzle. We're looking at the trend lines, we're bouncing in between them. We want to see the volume come up once we break that resistance going to the upside to confirm, or at least help us confirm, that we are breaking out and we are moving to the upside, or it is a breakout. They call it a breakout. A breakout is when a pattern forms, then you break the resistance and the volume comes in, and that's a confirmation of that breakout, quote unquote. So that's what I'm looking at. Let's see if we come down, hit 10 cents. I don't really care at this point. Like I said, I'm in an accumulation phase. So the lower we get, the bigger position you can have on Dogecoin. Technically, you know what I mean? It's like a discount, or just cheaper Dogecoin in comparison. I know a lot of people just like buy and hold it, but yeah, if you've been following my videos, like I was saying back here, we had this big huge run. We kind of topped out a little bit. That we kind of formed like a, let's see, it was like a pennant pattern over here, something, I don't know, something like this. And instead of us like shooting up, we kind of had trouble on this area. And we watched the trend lines, like I was saying. So we were watching this trend line. We had bottom, bottom, bottom. We broke that trend line going to the downside. In this area is where I took profits from all this stuff. So then, took profits, and then as we were heading down, I've been using the Fibonacci retracement chart tool, like I was saying, drag from the bottom to the top. I use these levels to dollar cost average back in, and on the way down, a lot of times what will happen is we get support and resistance on them. And if you've been watching my videos in this area, there was some pretty good trades going on, because we bought, or I did. I bought, and then I sold. I was waiting for it to come back down here again, but it never did. Well, it did over here, but it didn't in this area. We came back up, got resistance right at that Fibonacci retracement levels, took profits on that, came back, bought it again, came up, sold it again, then bought it again, and then bought. And I think I've just been trying to accumulate as we go down in this, like basically throughout here. I haven't really been trading in this area very much, as opposed to just kind of accumulating Dogecoin as it goes down, because like I said, I took profits over here. At this point, my Dogecoin position was very small. I mean, it's kind of cool that I went down, because that's what you want to do, is buy low, sell high, and then buy as it goes down. In my opinion, that's how I approach it. Technically, like if I would have just avoided buying for a while and just put all this, like all the money that I kind of bought in here down here, then it would probably be it'd be much better. But it's hard to perfectly time the tops and the bottoms. We don't know exactly how far it's going to go down to, or how high it's going to go up. That's why we use trend lines. That's why we use the Fibonacci retracement tool, levels to dollar cost average, and so on and so forth. Like right now, I am kind of holding off on doing anything. I kind of want to see it. Like I said, I wouldn't mind if it came down to 10 cents, because that's just going to be cheaper Dogecoin, bigger Dogecoin position. So when it does eventually pump again, then I'll be prepared. So yeah, and in my opinion, like if you're kind of waiting, I mean, we get these cycles every 4 years. So the worst you have to do is just wait another 4 years before it starts to pop up again. In my opinion, I think I have a feeling Dogecoin will continue to follow Bitcoin, in the sense that every 4 years it'll at least get a nice move to the upside. And that's because of the halving. If you don't know what the halving is, go ahead and do some research on it. But basically, every year it's harder to mine Dogecoin, or you get less Bitcoin for mining it. And And like I said, the cryptocurrencies in general kind of follow Bitcoin. So yeah, every 4 years. Um, yeah. So 2024 was it 2024? Yeah, it was 2024 was a halving year. That's, I mean, I was like saying, I was telling my coworkers like in this area, I think Bitcoin's gonna go up. I mean, crypto in general is gonna go up, and it did. And then we came down, and then we got a huge move to the upside. Like, where's this? Yeah, because this is where 2024 started in this area right here. And that's like I said, it was a halving year. We got this nice move, and then that was a very good move, and then we came down, and then got a huge run, and then now it looks like we came down. It looks like we're in another little bear market kind of. So let's see how long this lasts. Let's see if we have to wait another 4 years or if there's going to be another leg up. You know, yeah. So we'll have to wait and see. Let's see what happens though. But I think that about does it for this video. If you have any questions, let me know. If you want to watch the last video, check it out right here. If you're new to trading, check out this playlist right here. And I'll see you guys in the next one.